Tinfoil hat, Ralph.
You want to secure your assets.
We can crack the wallet.
Oh, we've done it before.
We've got rigs. Character adversary attribution mode.
With our private keys combined.
Building some kind of blockchain super weapon.
There's just a number of vulnerabilities that are in the smart contracts.
Math. It's probably secure.
They all secretly mine cryptocurrency.
What coin can I trust? Which one is cryptographically secure?
Don't roll your own crypto.
CoinSec podcast. Yo.
Oh, Ralph got abducted.
Which coin can I trust? Which one is cryptographically secure? That's a statement from Mr. Ralph, and I think that's going to be the highlight of the show. Actually, is on that intro.
I mean,
which coin can I trust? Which one is cryptographically secure?
Ralph has evolved through the course of the show to where that statement now is just him wearing a tinfoil hat.
Welcome to the CoinSec podcast. We have all kinds of stuff to talk about today. It's going to be quite an episode. We've got conspiracies to talk about. We've got hacks to talk about. We've got what else? What vulnerabilities? We've got different fun crypto hackery to go through today. So welcome everybody. If you're joining us live, you can jump in our Discord and chat in our live chat channel with us and ask any questions. We love to have the interaction there. So episode 61, guys, we're here. How have you guys been?
Unlike the crypto market, I've been terrible.
I know, the crypto market's just been booming, hasn't it?
And it's
booming
been doing so well.
I'm making so much money off of the stable coins.
Hey, it's the perfect time, right? Never buy green candles.
That's such an interesting statement, Ralph. Making so much money off of the stable coins.
Making so much.
Oh, that's because he shorted Luna 100 times.
Oh.
Hey, man, when there's blood in the water, got to be a shark. So.
It's funny because we have been filming this show since 2018, the beginning of 2018. So we're pretty weathered, I think, to market crashes and stuff.
Bitcoin 20K, that was high
for
me.
Yeah, I mean, to me, I'm unfazed by the markets these days because it's just another thing.
Honestly, I get excited when this
said,
happens.
Yeah, like Corey said, the 20K, right? He was like, that was a high for him. Well, the year before that, it was 3K, I think? And then it made that jump to 20. So, yeah.
Exactly.
So right now, this is
definitely hurts, though.
This is what we call a crypto sale. This is when you buy, okay? When everyone was all excited at 60,000, that's when you don't buy. That's when you sell. See, look, I've taught you everything you need to know about crypto.
And that is definitely not
right?
financial advice, right?
Yeah, we don't give financial advice on this show. I think Ralph's costume should tell you everything you need to know about whether you should take his advice.
What? No, I've got all the good ideas. They come right here.
Yeah, it's definitely if you're new to crypto or anything in the blockchain space, it can be probably pretty worrisome to see just these mass volatility with prices and crazy shit like we're about to talk about today with stable coins crashing happening. Just know that it's the way this thing goes. It really is just
I'd also like to remind you that Netflix was at $687 and now it's at $182 and 6 months later. So
yeah,
everything's volatile.
Yeah, I think that's the biggest thing that I've noticed this crypto downturn is the stock market has really been in lockstep. They're way more connected than they've ever been. Before, it was crypto went down and the stock market's okay. But or crypto went up or something, right? It was inverse. But now it's both of them are really feeling it. So
since I personally have been watching the market, they've always been pretty closely tied.
Oh, hell no, dude. The crypto dropped 50%, dude. The stock market didn't even move, man. We could go look at the tables, man.
If you go back far enough, yeah. But basically, now that the average investor is in,
that's
pool,
my point, though.
The past couple of years, of blue chips.
Past couple of years.
Yes.
I mean, obviously, Steve said, we don't give financial advice. We don't know what we're talking about, so make your own decisions. But it is, it's a market. It's a free market. So it's driven by emotions. And when people feel scared, that drives prices on the stock market, in the real estate market, and anywhere. So I don't know why people are scared right now. Apparently there's a war happening. I don't know. I haven't read the news. That's why I come to this show.
Where you get all the conspiracy theories.
You get all the news. Well, see, Ralph's actually wearing that hat to keep the thoughts in.
Yes.
Oh, right.
Yes. So I don't want the government to read what's going on.
So I actually have a pretty sweet idea for how we can all get rich. We should all buy Luna.
Oh God, this is not financial advice.
The ticker is UST. I don't even think you can buy it. Can you? They halted the whole blockchain. So,
Corey, you can buy all the Luna you want from me, buddy. I got you.
Really? Because there's no blockchain, Ralph. So what am I going to do? Send you some greenbacks?
It's an IOU type scenario.
Localluna.com.
Localluna. I'm starting it right now. It's going to be huge, dude. Everybody can meet up. It'll be like an intervention type thing.
So why shouldn't I buy Luna?
Oh boy. All right. So I guess we're gonna dive right into this, guys. All right.
That was literally your prompt, okay?
Okay. All right.
Do your job, Bo.
If you haven't noticed, like we kind of hinted at earlier, the markets have been pretty volatile the last week. It's been crazy drops. But on top of that, there has been one of the biggest events I've seen in crypto related to how stablecoins are supposed to function and how a specific stablecoin completely fell apart and nuked their entire market. So for those unaware, stablecoins, like the whole idea of a stablecoin is that you put in $1 and it's always going to be worth $1. Like it doesn't change price, right? Like that's the whole point of a stablecoin is it stays stable, yet allows you to remain on like the blockchain, So it's usually an ERC20 token, something you could easily trade on a decentralized exchange, not have to actually go through like a centralized entity to cash out. So anyways, there are a few different types of stablecoins out there. Some of the more popular ones are Tether, which is, I would say like still the most popular one. There's USDC coin, and then this one that we're going to talk about today, UST, which is Terra. And this particular coin had an issue where it actually had a Depeg versus the dollar. So what that means is that while it's supposed to be $1, it fluctuated in value enough to completely throw it off balance and drop an insane amount of money. So, so like, I guess, how did we get here, guys? How did we get to this point where Terra just completely dropped?
So has anyone ever written code where you didn't really account for all the edge cases?
Human nature.
Posted a link in the chats to the one Twitter feed that I was looking at before, basically talking about how it all began with a massive sell-off on Curve. Mm-hmm. The Curve UST to USDC swap that put the three-pool curve out of balance. So that out of balance started there. So then led to a $2 billion withdrawal of UST on Anchor, and then everything just kind of went to hell from there, right? So once the peg gets out of balance, that pool is basically they have to put funds back in it. So I think they went back and did that to try to put it back into balance. Yep.
Yeah. So one thing I think is really, really important to highlight is there are different types of stable coins too. So there are actual fiat-backed, allegedly fiat-backed. Nobody really knows for sure. But Tether, right? Like that's
they
one of the main examples.
They just say it's paper-backed. It could just be
paper-backed.
Paper.
It's actually in like Monopoly money. It's way cheaper.
Right. Yeah. I mean, so nobody really knows, right? Like it's all alleged that they have.
Loonies.
They have backed these tokens with actual real-life human, dollar bills. Now that's one type, right? Where you have this, fiat-backed stablecoin. This one that we're looking at now is an algorithmic stablecoin, meaning that it has actually programmed, like what Corey said, to try to keep that balance based off of a completely separate coin that is then funded from another entity. So What was it called? The Luna Foundation or something? Is the
Anchor
group
Protocol?
No, there's an actual group. The Luna
LFG.
Yeah, Foundation Guard. That's what
The
it is.
bankruptcy organization.
A nonprofit organization formed to support the growth of the Terra ecosystem.
So they ran out of money and they couldn't keep it propped up, and then it fell
And a bunch of people shorted it at the same time, which didn't help, right?
Yeah, they were going to try to make money. Isn't that the point? Why are we here? To make money.
Yeah, so the value of a UST went from being stable at $1 down to like around 12 cents. I don't know, has it gone lower than that?
So it's
5 cents. It
5
looks
cents.
like, I think.
So
it's on sale, guys.
Part of the problem is that you can redeem Luna for UST, right?
1-to-1.
But it's designed so that if UST is trading at 99 cents, arbitrageurs can buy it and redeem it for $1 of Luna. So once that price started to slip, everyone's buying this UST at 13 cents and selling it for $1 of Luna, which just collapsed that entire. That puts pressure on the Luna price, which basically just spiraled out of control. And then they just decided to halt the entire Terra chain. So
yeah, because it got so cheap that you could actually just go buy enough Luna or Terra
to control
the network, right? It's wild.
Yeah, a massive problem all across the board, right?
And
so, but what does this do to the whole market then? This puts uncertainty into the market, right? So everybody's panicking, panic selling, shorting this, selling off, even Bitcoin and stuff like that. Everything's going down. This definitely doesn't help that, and the stock market's being bad, like Corey.
I think this happened due to overall uncertainty. It wasn't like this caused the uncertainty. I feel like people are pulling their money out of
it.
Like it makes sense, right? If you had your money in a stable coin and you're like, okay, I'm actually going to pull this stable coin back into my bank account because, I don't know how, then everyone's doing that. It's like a run on a bank, right? I mean, it's
a run on a bank.
It is slightly ironic that, this is specifically what it's designed to prevent. This opens
up an angle from, Ralph's got the government tinfoil hat on, but we do have a problem with regulation coming from the Fed, right? Janet Yellen and crew looking at regulating stable coins. This is definitely fuel to that fire. So
you can say it's a problem,
comes
but
out. Right.
If you invested in this, I think you'd really like to have a U.S. FDIC back on your account right now because
something for sure. And I think maybe that's not like, well, we're going to control all of the stable coins, but and this maybe even brings up an even bigger problem is if the government has a controlled coin, right? A government controlled coin that is what's backed or whatever. So people invest in that, but now they have control of your funds. So
yeah. I mean, they already do, right? If they decide to declare war on, someone, then the value of the U.S. dollar can change. But, I mean, I do think that, obviously there will always be, way Wild West protocols that you can invest in. But I do think I think this proves, not that I'm pro-government or anything. I mean, in certain cases, I need roads. But, it proves that I think there is a use case for stable coins. And I think that when the stable coins aren't stable, it demonstrates the need for something that is either backed by an entity large enough to prevent this from happening or code that's written in a more effective way that doesn't allow this attack with price manipulation and all the downward pressure on the Luna token and all that stuff.
Right. The code actually evidently failed, right? It didn't do
what it was designed to do.
Right. Yeah. So, and we have all these and you can audit your code and have all this stuff done to ensure the security. But at the end of the day, how do you really know until something happens, right? You can test the stuff all you want, and even in the offensive security that we all do, we can test the network all we want, but then a new flaw comes out tomorrow, and it's something that we didn't see the days before. So is that something that might happen to some of these other protocols that do algorithmic stablecoins, right?
I mean, algorithmic stablecoin just sounds like an oxymoron to me. That's like saying, jumbo shrimp or something. It's like, I don't really think that's what you're going for there. I mean, this
whale shrimp, I think, might be a better.
Yeah, right. Like that's, algorithm and stable just don't gel in my mind as being two words that can describe each other.
Mm-hmm.
I get what they were attempting to do, and I do think there'll probably be a similar version of this in the future that accomplishes it, in a way that doesn't just the bottom doesn't fall out if it gets a little pressure put on it. But I guess it sucks. I mean, basically the end result of this is a lot of people, if you had any money invested in this and you didn't get your stuff before the run started, you're out. I mean, you have $0. So,
well, it's not zero. It's like 20 cents or something.
Right. Your 10K went to 20 cents. It's like hyperinflation, or I guess. Yeah. It's like if a company goes bankrupt that you own stock in or whatever. But I mean, I definitely do think, I guess if you know of anyone that's investing significant money in stable coins and has been impacted by this, please tell them to get in touch with us. But I mean, the Rect Finance or the Rect News site says like startups who are reliant on the Anchor APY, meaning like people were expecting that 19% interest, I guess, to run their startups. I don't know.
Well, why would you put your business leverage
in liquidity pools?
APY? No, I mean like potential earnings, not just like,
oh yeah,
oh hey, we made $1,000 this month. We can buy a new desk in our office. No, it's like hey, we might earn $100 this month. Maybe let's just go ahead and buy the desk.
I agree with you. I totally agree with you. I also can't possibly imagine having a significant chunk of my business assets invested in stable coins unless I absolutely had to. I mean, we've made the joke many times, but when you're running a business and you're taking that amount of risk, you'll notice a lot of the crypto companies don't even let you buy T-shirts with crypto. So like they want their US dollars because that they're investing capital to get those T-shirts, and they want that capital back. So I guess if this happened to you, please get in touch and let us know what happened. But yeah, I mean, stable coins are not always stable. Just because it says it in the name doesn't mean it's legit, I guess.
Exactly.
Yeah. Oh man, now nobody's going to trust stable coins. We're all
and on the note of like, can we test this? I do think it's difficult to test something at that scale when you're talking about a liquidity pool and like obviously I'm sure there's a Terra and Luna test net, right? But like putting all that downward pressure from the Anchor protocol pool and all that stuff would be really hard to simulate. But we definitely need that. We need ways that we can simulate those kinds of price manipulations or like market fluctuations so that the people who write these algorithms can make sure they can survive. Which I'm sure after this, especially, they're looking into exactly how to do that, to simulate that.
Or maybe it's just a bad idea to do algorithmic stablecoins.
Yeah, algorithmic stablecoins just might be too tough.
I mean, it's kind of funny though, because like, what is the other option, right? If you look at some of
they're backing it by something that's really a lot harder to manipulate.
Yeah.
Sure, but that's going to
asset backed is another one.
That's gonna I mean, that's gonna limit the supply so much though, right? Like if
we're talking about a token, right, that just has like some arbitrary value as opposed to like, I don't know, like a house, like, or some other kind of asset, like something that you like that other people have demand for.
Right, but if I have to go to the bank,
fall into ashes,
Right, but dude, if someone has to go and get $10 million in cash and store it in a bunker somewhere, that limits the amount of liquidity and cash that asset-backed stablecoin is ever going to be able to trade with, right?
Because they have to store money in a bank, which is just like a number on a computer? What?
Well, because they have to do that on some level. They have to like convert it. I don't know. I mean, I'm not saying. I mean, I agree with you. I mean, honestly, don't keep your money in stablecoins at all. I mean, to look at it cynically, why would something offer you a 19% return on investment if it's not some risk? Like, you can't just keep your money in.
Most stable coins aren't like that. Most stable coins are just that. They're just a stable coin. They don't give you any interest. They're just like,
So,
okay,
well, you can put things into like Coinbase. There's Gemini Earn. So stable coins earn higher than like say Bitcoin. So you put it in there, you get, I think it's 6 to 8% back.
Right. But the point is that comes with risk. You can't.
Yeah,
just,
for sure. I mean, something could
Right.
happen to the stable coin. Don't put your eggs in one basket, I think.
But I mean, your bank does the same crap too. You set up a savings account. I mean, it's really
True.
crappy interest, but I mean, it's the same idea. But
yeah,
you don't
the
ever
only
go,
difference
"Whoa,
is that
whoa."
if your bank explodes in a fire, then the government bails you out. That's not
That
going to
was
happen.
only after the last time that it failed that they had to come up with an insurance policy. It's called the FDIC. So I mean, this is like an experiment on an experiment, and then we're like, oh no, it's stable now.
Well, right, but the difference is it's not 1929. I'm not going to be unemployed for 20 years.
All right, guys. I hate to break up the.
No, we're gonna fight this to the bitter
I hate to break up the fight here, but we have a lot to talk about. We have other hacks to talk about, and we're already 20 minutes deep. So let's keep the train rolling here.
Like how Ralph still has the tinfoil hat on.
Yep. All right. So first hack of the day that we're going to talk about is the FEI Rari protocol. So on April 30th, 7 of Rari's fuse pools were drained of a total of around $80 million. Rari uses forked compound code, which we've actually talked about a couple times for other hacks. So we talked about Cream Finance getting hacked. We talked about 100 Finance being hacked due to reentrancy issues, and we're seeing a similar pattern here. What was that, Ralph?
I said anything named finance.
Named finance, yeah. You better watch out.
Put your temple hat on.
Mm-hmm. So the vulnerability, this reentrancy vulnerability, was in the called out value related to to C Ether. And in this case, it was actually reported in March. The vulnerability was reported and mitigated by upgrading the C token and comptroller contracts. However, the new reentrancy protections didn't cover the function exit market within the comptroller contract.
Whoops.
So by
They
using
didn't patch
flash
all the
loans,
servers.
they were able to borrow ETH
Ding, ding, ding.
and re-enter via call value. So
I've heard of this hack.
Tornado Cash.
What's
Following
that?
the attack, the attackers began depositing the proceeds into Tornado.
But they only sucked out 15 mil. Now they're like, all right, that's enough to live for the next couple of months. Now they left 62 million still in the wallet.
Yeah, I had a theory about this. So I saw, I think it was just a clip of a person who worked at Chainalysis. They were being interviewed by I think it was Senator Warren about like the whole idea of tracking transactions and stuff. And one of the things that was brought up was like, hey, if I'm gonna try to steal $1 billion, like I could just send it through Tornado Cash. And the guy working at Chainalysis is like, no, that's incorrect because there's really only like $30 million locked away in the pool. So trying to send anything more than that is going to be noticed, and it'd be very easy to track. So I have a feeling that's probably why the 15 mil is the only the total that they had deposited.
Until Tornado Cash gets a bigger slush fund, right? We're gonna have limits.
Well, Tornado Cash we talked about last week. They have like agreed to implement some like anti money laundering procedures, or at least talk to someone about how to do that. So they do have a big target on their back, and they are responding in accordance with what people are telling them to do. But
yeah, it is kind of weird though about that like decentralized protocol thing, right? Because if you just like arrest all the people that are running it, like it doesn't necessarily go away, but then it's like, how does it continue to run, right? I don't know. It's weird, right?
When are we going to see somebody? When are we going to see somebody that hacks a major like smart contract, like a $600 million or whatever, and then they make their own Tornado Cash and fill it with $600 million, and then now it's just this crazy liquidity for other hackers to use.
Yeah.
Yes. And then they make like a little interest off of it. Yeah. Perfect.
Yeah.
Genius.
That's gonna happen.
Calling
it. Totally calling it.
Hack pool. We call them names.
Hurricane Cash.
Hurricane Cash.
Oh, man.
Whoa.
F5 Cash. maybe.
I'm gonna go buy Hurricane.cash now.
So they were offered a
Sell it
$10
to
million
that guy.
bounty to return the funds, which is, a lot.
Bounty. How about ransom?
Yeah. Well, no, I mean it was a bounty offered by the people, by Rari Fuse.
Oh,
or
was it?
FEI
Okay, I
Rari.
thought it was the other
Yeah.
way around. All right.
No. So, but like, who knows if they're going to take it because they already sucked out 15 mil. So, like, I feel,
I
feel
know,
like it's
right?
like, hey,
It's like
we'll
when
give
your
you
bank
10
gets
mil.
robbed.
Oh, well, I already have 15. So, but yeah, I mean, obviously, to cover, the security recommendations, as we probably should. First of all, if you're going to reuse code, make sure that you port the fixes from the code that get applied to whatever you stole it from, right? So if you stole the code from Compound and then Cream gets hacked and Compound gets updated, you need to make sure that you pull that updated code and use it. Also, when you do fix it, make sure you fix every function, right? Maybe don't just leave that exit market function unprotected so then they can just do the exact attack.
Right.
This also
the old planned hack.
The
Let's say that-
copycats are real, right? I mean,
it
we've
happens
seen a
for
lot
sure.
of copycat
Especially on
attacks in the
Binance
crypto
Smart
space.
Chain.
Yeah.
So this reminded me of something I saw yesterday. There's an article. So Forta Network. I sent you, I think Ralph and Steve, I sent you guys this yesterday. But they wrote an article basically around the idea of a Web3 kill chain, which I thought was fascinating to consider. And like they bring up the whole anatomy of an attack and how the very first thing is funding the attack wallet, right? Like funding that initial wallet that's going to be used in the attack. And how oftentimes it is funded from Tornado Cash. So like I was tossing around the idea like, okay, so if the majority of attacks, including this one that we just saw, were initially funded by Tornado Cash, how hard would it be for a project to code in the ability to detect if a wallet has ever received transactions from Tornado or is coming directly from Tornado Cash, and then just like drop any of those transactions that are sent from those?
Tornado bad.
No, yeah, yeah. Tornado wall.
Oh, that's my Web3 firewall I'm working on. You really?
Yeah.
To do it at scale, it'd be really tough because of the amount of back propagation you'd have to do, right? You'd have to you'd have to trace back every wallet address like a certain number of hops on the blockchain, which would just be like insanely computationally expensive.
Yeah, you would. Yeah, and that's the thing. Every time you did something like that, it would probably cost gas on the network.
Yes.
At the very least, it would slow down your
update
transactions.
the contract, right? Yeah, it would slow everything down.
That's one thing that I was thinking. Like, I don't think you would necessarily have to update the contract because this is something you could do off chain.
Yeah, you can do it.
Have an oracle.
How would you have
right?
a allow list off chain?
Well, no. So you would reference the list that is off chain at an oracle. So you have an oracle that basically the whole idea is it just looks at Tornado Cash's transactions and then creates a list of every address that interacts with it. Following those would be a lot of work, right? Like trying to detect.
Yeah,
like,
that's
okay,
the
well
thing.
now it's
So the
have to follow
contract
them
would have to
back.
check the oracle.
Addresses,
It would have to
right?
check the oracle each time a transaction was happening.
Well, like Bo said, you'd have to follow each transaction back because I can go through Tornado Cash, then to my other wallet, then to 1,000 more wallets, and then here I am.
Right.
So I don't think it's really feasible just because there's an arbitrary number of wallets that you can have, and you can't track every transaction. Think about it like this: if it's delaying an active transaction, that's delaying a revenue stream for the company that's doing it. So they already don't want to do it, right? It's like banks. If your credit card isn't authorized in less than a second, then you're just going to use a different credit card. So they'll just approve stuff that could be fraudulent and worry about it later. That's how credit cards operate. On the blockchain, because of the timing of the attack, I can spend weeks passing wallets and passing transactions and generating wallets and moving things, or even just purchasing a wallet that is already clean and just transferring my funds there. On the other side, the whoever processes the transaction, they don't have that amount of time. They have to do it very quickly, and they have to track that back as far as they deem. I mean, I will say you could cover the most basic use case, which is what Bo said, which is If the money in the wallet literally just came from Tornado Cash,
Right.
you
Which
could
we've
drop
seen.
it.
We have seen that.
Which we have seen because there's no prevent. Yeah. So, I mean,
Yeah.
it's cat and mouse. I don't think this would buy you that much. I feel like more of just a generalized approach to like anomaly detection would be better. Like,
Well, that's good though, because what you're saying about that, because it leads into the Saddle Finance hack, which is the next article. So Saddle Finance, a decentralized exchange for trading stablecoins, was hacked for about 11 mil. BlockSec, so kind of like how the FBI will come and notify you that you've been hacked, your company has been hacked. BlockSec did that with Saddle. And apparently they've got some kind of system that they're able to rescue 3.8 million from the exploiters with an internal system that detects and then front runs the hackers with off-chain arbitrage bots.
this
So
is
it's
like
using
so
flash
vigilante.
bots, right? So it's totally hacking back.
It's like vigilantes.
Yeah,
It's like
absolutely.
you were going 55 and a 54, now pull over. This is a citizen's arrest.
Citizen's arrest. Yeah, for sure.
I mean, it's
crazy.
I mean, I don't even want to know how that works. Off-chain arbitrage bots. I guess it. Wow. I mean,
So, same thing as with what you were talking about earlier, Corey. This exploit was possible due to a bug in an old version of the library they were using, the Metaswap utils library. So, same thing. If you're going to use code, make sure it's up to date. And right, we see people compiling stuff with old compilers all the time. Make sure you're using the newest and most secure if you can. Yeah, simple stuff. Make a difference.
yeah, these price manipulation attacks. I get how you could code something that would look for this kind of price manipulation. It's like if the price drops below X, do this.
Down.
I wonder if they. It's funny. I wonder if I really am curious as to how these bots work. Is it like if the price drops to a certain amount, then just pull a bunch of flash loans and buy it? So then the price
steal from whoever did it, right?
Well, it's basically like, you're front running the attacker. So you're like, oh, if the price drops low enough, just flash loan and buy it because someone else makes the price drop. Like they did all the work, and then you just. Oh God, I don't know. I mean, it's really cool, but it's also really spooky at the same time because like there's no difference between the only difference between BlockSec doing this for like security and someone doing this as an attack is whether they take the funds and buy a Lambo or take the funds and give them back to the company. So it's just kind of like it's cool. It's really cool, but it's also like I don't love the idea of like a citizen's arrest for a misdemeanor. Or even a citizen's arrest for a felony, right? Like if I'm in a bank and it's getting robbed, I do kind of want the police there, not just like some dude that's like, I was trained in the military, I know what I'm doing, So,
Meal Team 6 coming in.
Meal Team 6, we're back from the buffet.
They took out the speed bumps, we went faster.
All right, moving on. So we talked about Deus DAO actually on the last episode because they were hacked back in March, but they lost more money this past week. So multi-chain DeFi protocol called Deus DAO suffered a flash loan exploit on 15th of March. They were liquidated for a total of $3 million. That was the first time we talked about them. Now they've lost a further $13.4 million.
So they were already hacked. They got hacked again. It's like once
did.
you do it once, just keep on doing it. Like,
yep. The hacker took a flash loan to manipulate the price oracle within one of its liquidity pools on Phantom, involving a token called DAI, not to be confused with DAI, DEI, and maybe it's DAI, paired against USDC stablecoin.
Yep.
I mean,
also exfiltrated through Tornado Cash.
Again, our favorite way to.
So they manipulated the price. They purchased more of the coin than they sold it.
Yep.
In this episode, brought to you by Tornado Cash.
Again, like I guess I'm okay. First of all, I have to say Deus Ex flash loan. It's like Deus Ex Machina, but it destroys the blockchain. But I mean, how are we still like seriously?
Sorry, Ryan, in the chat. Deo. Deo.
Daylight comes and we want to go home.
Yeah, it's probably what the creators were like. I want to go home.
Yeah.
Oh.
How are we still doing this, guy? Like how are we still like basic price manipulation with flash loans? How?
I don't know. I already brought up about how they should just disable flash loans. That goes half your attacks, but I don't know. It's like, well, then somebody with enough money could do it. Well, then it leaves it to like 3 people who have a crap ton of money, but obviously don't have the technical ability. So I don't know.
I mean,
Yeah, but then you don't
get
the arbitragers that can use your pool to, arbitrage money.
Yeah, but can we just maybe limit the amount of flash
We could
loans?
say 1 billion is the top.
Yeah, like
That's enough for you.
Yeah, yes, right.
it can't be that hard to just be like, if flash loan greater than $1 million equals no. Like,
Yeah.
like it's I mean, dude, not to say that I'm
all you'd have to do is just make sure, like, you could still allow the arbitrage. It just couldn't be a flash loan, meaning it had to be a couple blocks, right? Like, it has to be a full commit, right?
Well,
you have to commit to all of that money, not just like.
So
the main problem was the price oracle. The initial issue was manipulating the price oracle.
Sure.
So
I mean, like, we're getting past the
that
issue.
to-
I'm looking at
So-
like a patch.
So here's the thing, guys. Here's the thing. So the reason flash loans are so interesting to people is because they are interest free, right?
Mhm.
So
It's same block. You can
Same
you can
block.
make
as long
money.
as it's in the same block,
It's
interest
appealing
free.
to day traders.
The second that a protocol implements a loan function where it has to be spanned across multiple blocks, that's when they have to start implementing interest fees. And so that creates a huge, I guess, like interest for, I mean, not to be confused with like monetary interest, but interest for humans to leverage the flash loan side so they can perform transactions while they still end up having to pay like a minimal fee, but it's not nearly the same as like a long-term loan.
Yeah, I mean, I get it, but at the same time, if you lose your entire algorithm because you got price manipulated out of the freaking contract, then I don't know if it was worth it to attract people to your like.
Yeah.
It's like me being like, "What's up, guys? I'm opening a barbecue restaurant," and then everyone shows up, and I'm like, "I don't have any meat. Sorry."
Shouldn't the pool?
It's like what? Like, you're generating interest in something that is worth. I mean, the whole price manipulation thing to me just kind of makes me laugh because it's like, decentralized, bro. We got to decentralize everything, unregulated, Wild West market. And then someone does a price manipulation, everyone gets mad. It's like, yeah, that's literally like, that's what that means. Like, you can't have.
Shouldn't there be a check in the pool contract though that says, hey, if the pool gets X amount to be withdrawn, that will throw the pool off balance. Don't do it. Like, shouldn't that be in the pool's code?
Now you're thinking like a mathematician.
Yeah, right.
I mean, the answer is yes, but that sounds very regulated.
Very hard,
Steve.
right? Security is hard.
Security is definitely hard. I don't know. I would just make something that's like you can't take a loan out at all. Like, you can't just like make up borrowed money no matter how many blocks it is. Like, you just have to have it, right?
Yeah, it's definitely.
It doesn't prevent the attack entirely. It just makes the attack something like the barrier to entry now becomes $1 billion, which you're like, yeah, maybe you go convince somebody who's a billionaire to do this so they could get the 10 million. But now they're like committing to this, actual theft, right? So, it
Well, we talked about one like the last episode
where
where
people have $1 billion.
where people found that in a DAO that if you had enough assets invested, you could just commit a line of code, and then they just edited a line of code to just send all the money to their own wallet. Like, I mean, some of these DAOs in general are, to be honest, just straight up dumpster fires. Like it's basically like distributed, distributed interest, and people have malicious interest. So you're like distributing, you're like, no, we want the bad guys too. Come in. What do you guys want to do? We want to steal all the money. Okay. Well, you have like what? So
That's
I mean,
fine. No, this is cool. This is cool. House is on fire.
the only thing that would be funnier, and I wish, is that they sold it for USDC. If they sold it for USDT, imagine how that would be. They're like, we sold 13 mil, and then it's like, pew, it goes to zero. They're like, no.
Yeah. Whatever.
So,
You know what? Here's my prediction for 2022. We're going to see more flash loan attacks and more DAOs are going down.
Yeah, really. Take the word flash loan and DAO, put it in a sentence together, and you just received minus 50% of the market value.
And here we go.
So what's kind of interesting is our next story isn't actually a flash loan or a smart contract hack.
Oh my God, we're
and they
switching
they
gears.
actually
I can't
they still
believe it.
lost $2 billion. So MMFinance site
Another
was
one. I told you anything .finance, man, shady.
Is it called finance or is it
the
just
maybe we should make HMM finance.
finance?
Lost your money?
Was the subject of a DNS attack allegedly.
The old DNS. It's always DNS. You know
Allegedly. I love that you throw that in there because it's like, oops, we upgraded the DNS reg. Oh.
Oh.
So allegedly, an attacker managed to inject a malicious contract address into the front-end code of MMFinance. Attacker used a DNS vulnerability to modify the router contract address in their hosted files.
What was the DNS
Oh,
vulnerability?
wait,
Bad
that's two
password?
separate vulnerabilities there. One, injection into the front-end code, and the second one, DNS vulnerability.
Back to why I said allegedly. This is straight from their own blog.
No, but they changed the DNS record so that it went to a different site that had a different front-end code, so they changed the address.
Attackers
That
could
makes
do
sense.
it, but it certainly sounds hella rug to me.
Yeah.
I mean, that's why
we accidentally
again,
pushed the password to Cloudflare to our Git
I
repo.
do just really
I'm sorry,
want...
we have to make at least stickers, if not t-shirts, that just say hella rug.
I really got to say, honestly, Bo, the way that you say allegedly, it just makes my heart happy. Like, you're like, allegedly. You say it like so well. It just makes me so happy.
Come on, hella rug shirts. We got to make it
Hella
to go with
rug.
our Code is Law shirts.
So yeah, if it's called finance, hella rug. I mean, part of the show for me is every time we talk, or okay, not every time, at least half the time we talk about a hack, I've never heard of this. Like, had anyone heard of finance?
No, but it's good.
It's good.
What if it's MMFinance?
No.
Finance? No.
Marshall Mathers.
Yeah.
Marshall
No, you pay in chocolatey goodness.
Oh,
Chocolatey
God.
goodness.
The candy coating layer has been degraded. Price manipulation.
You know
MM
what's always
coins backed
funny?
by actual M&Ms.
You know what's always funny? Like, it's a rug if you go to the site and like everything's gone.
That was a DNS attack, dude. I don't think you understand.
You're right. I don't.
So, I mean, shockingly, 2 million, which I guess was the point at which they decided they could all buy Lambos and retire. So,
I mean, would you take 2 million?
No.
You wouldn't?
To have
I
a
don't know.
group of angry hackers against me for the rest of the blockchain times?
The rest
No.
of the blockchain time? Well,
So, like, all right, so let's just, again, tinfoil hat, say this is an actual rug. It's an interesting way of doing it because they didn't actually, like, hack their smart contracts. They allegedly had a DNS attack, and an attacker changed the front end where they were able to steal funds from users who were connecting to their site. Right?
Yeah.
That's a very
Plausible.
plausible, yeah.
Yes.
Yeah.
I mean, we're obviously.
Domain
I mean,
takeover or something. I mean,
yeah. I
whatever
mean, Ralph
DNS
is
hijack.
wearing a tinfoil hat, so we're being a little bit cynical, but for sure, this could be a legitimate attack. I mean, we've seen even large, like Facebook got hit with a BGP attack. Plenty of organizations have gotten hit with DNS attack, poisoning, and manipulation. It is a common attack. But I think the biggest thing for me, and that Bo mentioned as well, there's not really any third-party debriefs or this is just them being like, we got hacked, and here's how it happened. We know everything. The attack, it's like, well, guys, like if you knew everything about this hack, why didn't you stop it in the first place? So could be real, could be rug. I mean, we should also get shirts that say real or rug or hack or rug or something. But who knows?
Hella
Oh,
rug.
it says and compensation. What does that say? Are they going to give people their money back?
who knows?
Resolution. Our team currently consists of cybersecurity expertise. I don't know if that sentence really makes any sense.
Doesn't make
What-
sense.
Who are these people?
They're using Google Translate. That's the best that's the best information I can give you.
Yeah, got it. Cybersecurity experts. It sounds like you
So-
should have hired the other people.
Our team is sorry. In the end, we will set up a compensation pool for those funds. Our team will forsake our dev's share of trading fees and purchase MUSD with all these trading fees.
Oh.
We will then place all
Forsake.
MUSD into a compensation pool to allow users to claim. Totally not a fish. A snapshot will be done shortly, and the amount in USD which you have lost will be tabulated. So it says it'll run for 45 days. So I guess if you invested at MMFinance, make sure that you get your compensation within 45 days, because after that, that's when the Lambo purchase.
How long till the compensation pool is drained?
About 4 days. Just kidding.
Let's put them out, guys.
I mean, I would say if the company you're considering buying from, again, Medium site is their main site. Is that a red flag?
They're all like that, dude.
So just to clear things up, their name is actually Mad Meerkat. That's what.
Okay, so that's even worse than Finance.
It is Mad Meerkat. Yeah, you're right.
I mean, their picture is like Fiverr
joke ruined.
Purchase. Yeah, no. My immersion is ruined.
Let's move on to a Fortress protocol then, if we're talking about meerkats.
It's called Fortress. It can't be hacked because it's a fortress.
Fortress Protocol, an algorithmic money market and DeFi lending protocol, has been drained of all funds following an Oracle price manipulation attack.
I hate oracles.
The stolen
I've seen
crypto.
The Matrix.
Yeah, no, that Oracle was fine. She was good.
Really?
Yeah.
I feel like she could be manipulated.
The stolen crypto has since been bridged from Binance Smart Chain to Ethereum and mixed using the privacy protocol.
Tornado
Cash!
Get your bingo cards out. I think we said it 4 times today.
Yeah, at least 4. Wow. It began with the hacker using ETH to purchase a substantial amount of FTS, the governance token managing the FTS protocol.
Oh, God, here we go.
The quorum votes on Fortress Loans governance contract is 400,000 FTS. That was worth just $18,000 at the time of the hack, and represented a smaller number of tokens than the attacker held. So basically, he was able to just vote to send all the money out of it.
He held the authority to pass any protocol change proposal that he liked. Then he passed proposal ID 11, totally not written by him, which changed the collateral factor within loan contracts from 0 to 7. What is that? 7 quadrillion. 700 quadrillion. He also updated the price oracle used by the loan contract such that the token's price would update even if voting power was 0. So then the attacker's collateral was raised. He literally price manipulated himself.
All of these protocols sound like big mazes of just
the attacker used his remaining FTS to borrow a massive number of tokens, convert them to ETH, and DAI worth over 3 million. Then he deployed the self-destruct mechanism and transferred the funds to Tornado Cash. This is seriously, like, we made the joke a couple weeks ago. Walk into a bank, take out a loan for $1 billion, buy the bank that you just took the loan from, and then tell them you don't have to pay back the loan because now you own the bank.
Yes.
How is this real? Like, I can't believe that this is a thing that these.
That's how DAOs work. We wanted this decentralized. We need this.
It's funny. I mean, I'm sad. I'm sad for you if you lost your money in here, but I just can't.
There was probably like 3 investors, by the way, who lost their money. It won $1 million.
It was called Fortress, but it was about as easy as Ocean's Point One. I don't even.
Point 1.
It's like literally like baby Ocean's 11. They're like
baby Ocean's 11.
Honestly, like if we're drawing up a heist and you come to me with this plan, I'm gonna be like, dude, this is the least original plan I've ever heard.
But it's still profitable.
It is. They made 3 million.
You could say you completed a heist.
You completed.
How many people can do that?
If any, you invest $18,000 and you get 3 million back, and there's no attribution because code is lost, so this was all completely legal, right? That's honestly the question. Did this person do anything illegal?
Could you enforce it if they did?
I don't know.
Prove it? Could you find them?
We need to get a crypto lawyer on our show.
I don't think that exists.
Yeah. No, they do. They totally exist. There's a few on Twitter. We should. I'll see if I can find one and reach out.
I don't
See if you
always
can
get
find
my
one.
attorneys from Twitter, but when I do,
It's Bob Loblaw's blog. I mean,
No, for
I
real
got-
though. Like we should get like an actual
Yeah.
lawyer.
yeah,
who
if
understands.
you are or know of a crypto attorney.
I mean, the main question
Yeah.
would be if
Get us
in a
some-
DAO, if I purchase a controlling interest in the DAO and then I publish malicious code. I mean, I guess there might be like a terms of use in the DAO that says like you won't hack us. Like,
There's probably no like court precedence on some of
It's
this
just
stuff.
a
No.
comment in the code.
it's
We're
a
not
comment.
We're
in
not
the code.
responsible for you using this platform.
No hacking allowed. Yeah, I mean that's the thing. I mean, honestly, explaining what a DAO is to a judge probably
To a
would
judge,
take
that'd take like 2 years at least.
least.
Yeah.
So,
So that's really the big problem. I don't know. It's this
in the court of crypto, 3 million is small claims. So.
Yeah, this is like baby heist, right? This is like my first heist. By the way, we should make like a what is it? Like a tracker that just looks for medium sites that get made and they have .finance in the name, and then like we could literally just read these. We might be able to predict who will be hacked next.
They'll
based off of
probably
this information.
accidentally
Just go to-
publish.
Just go to Immunify, grab all the .finance sites,
Yep.
and just look for flash loan functions. That's all you gotta
Yeah.
Well,
Dude.
so you could do that, or you could just because they'll probably accidentally.
We could make like a
publish-
site that puts like a statistical likelihood that you're going to be hacked next, right?
They,
Just off
dude,
of basic inputs.
it can't be that like this will happen in the next year. I'm predicting it right now. Some company will publish a debrief of the hack where they got hacked before they actually get hacked.
Dude, we should make a DAO where you bet on who's going to get hacked next.
Oh man. No, dude, like
it's the-
fantasy
it's the
football
dead-
or
it's the
fantasy
Deadpool-
baseball, but it's fantasy crypto
It's the
hacking.
Deadpool DAO.
Deadpool DAO.
Dude,
Like we do a draft and it's like, oh, I got Mad Meerkat Finance, I got
dude,
Cream.
it's going down, dude. And
Dude, you
can
got
see, like,
cream. What? You got all the compound derivatives. You're gonna get a win.
And you have
Dude,
to
you'll be
like, so you have
18.
positions. You have to have like just in like baseball and football, you have to have like your pitcher, your catcher, your outfielders. But it's like,
flash
but it's
loan,
like
your
but it's
Oracle.
like DeFi site, NFT
Yeah.
site,
Yeah.
lending protocols. Like,
Get all the check boxes.
Stablecoin.
totally do
No
that.
one had that one on their team.
No
but
one
hey,
had
it
that.
Can happen.
No, but next time they will.
All right, got about 8 minutes left here.
we got more to get through.
stories.
No, we
More
got
to
a couple
get
good
through.
ones.
All right, Web3's Sherlock Holmes. This is actually kind of a fascinating story. So I saw on Twitter somebody got hacked, and then they reached out to ZachXBT on Twitter, who helped basically be the Sherlock Holmes of Web3 and find where the funds went to. And
Where
Basically-
in the world is my funds?
he helped recover some stolen funds. So Twitter user 0x function with an X said his wallet was compromised and he lost $240,000 or 2,349 SOL, which I guess at today's prices is like what, like $100 total. According to ZachXBT.
It all depends when you read the article.
Exactly, yeah. The ones behind the attack deposited the SOL funds to multiple wallets. Then the suspect swapped the SOL for 40 ETH and 102,000 DAI and deposited it into Tornado. This is where they messed up, though. Minutes later, an address withdrew the exact same amount of ETH and DAI from Tornado.
Ooh.
See, that's
Wow.
so, you know.
Doesn't Tornado take like a little bit of a cut? Like, did I like charge you something on
Of course they do.
that? Well, then how's the exact
It ain't
amount?
free.
It's like John Wick where you pay with those weird coins from killing people. I don't know.
Oh yeah.
Well, typically, if let's say you transfer 1,000 of a coin, right? They'll take the percentage of whatever the fee is.
Oh, you're saying the
Off the top
exact
of that.
percentage came back on the other side in relation to like, okay, all right, that makes sense. I could track that.
So, and it's like we've talked about before, especially with like chain analysis, where you can visualize everything going and you can visualize the points at where everything converges. So all that money comes out and then it all comes out one other one you can track where it's going.
Yeah. You automatically put that
Yeah,
fee.
I mean, this is pretty awesome. I do wonder, like, it's kind of like swatting, though, because, like, if you're like, hey, change now, this wallet's bad, yank it,
Yeah,
give me
right.
the money. Like, it's like, I mean, I hope they vet it.
Yeah, can you
So-
sign a transaction first or something?
Because
Prove
basically,
that you own it.
So the tracking is really cool. They basically track the funds around, which, like Bo said, they made a big mistake withdrawing the exact same amount. Like, come on. But what Sherlock here did is he just reached out to the place where the money ended up and said, "Hey, hold the phone. Don't. This is funny money." And I guess they were able to get $50K and freeze it and potentially give it back to the person. So.
They also, it looks like they pretty much doxed this other guy who was, pretty much playing crypto.
So wait, what was that? What was that
trader,
paragraph?
Pumper, dumper.
What was
Yeah,
that
there was a paragraph there.
I think we should read towards the very end. When asked for a comment, Noah said that it is his wallet, but the transactions were for a different thing. Seems legit. This seems legit. The kid's not 12 years old. He said he got
absolutely
while trying to do
scammer.
an Amazon warehouse investment. Okay, I don't know what that is. I don't even want to know.
This is some fucking.
But Zach XBT thinks, who also is probably a 16-year-old, thinks he is not telling the truth because the influencer is able to provide messages, a police report, or a legal contract as proof.
Yeah, they just sent money, $50K, to a random person.
Right. Well, so basically, I mean, I guess they contacted the FBI. The FBI is going to be like, what the? So what? Someone went and seized someone else's funds and you want us to tell them where to send them? Like,
this is definitely some inventing Anna stuff, right? Like just made up bull crap, just lies after lies.
Yeah. I mean, it is cool that we have Web3 vigilantes, but
my favorite. I mean, yeah. Here at the end of the day, there really is people behind this, and sometimes those people are actually pretty public as well, right? They're not all just like ghosts behind the shadows, hackers. So I do think it's interesting though when we start connecting people with faces. The FBI, if they live in the US, I mean, you can prosecute this. So I think we may see that more into the future. But who knows?
I mean, I think the FBI's lead time on turning a wallet address on Tornado Cash into a person might be a little long.
It might be long now, but you never know in the future, right?
Yeah, you're right. I mean, we know that they have to KYC and they have to, there are requirements. Yeah. You can't just get a fake ID. Come on.
Oh gosh.
Next story. We've got a few more, guys. Let's get through these. All right. So Everscale wallet vulnerability. This was kind of an interesting article. So Checkpoint Research discovered a vulnerability in the web version of EverSurf, or is it EverSurf or Everscale?
EverSurf.
EverSurf is part of the Everscale blockchain ecosystem.
Yeah. It's the whole thing.
It's a cross-platform messenger, a blockchain browser, and a crypto wallet. Who wouldn't want all those things?
So apparently it's possible to decrypt the private keys and seed phrases that are stored in the browser's local storage.
Whoopsies.
Basically getting access to the user's wallet. Now, reading through it, when you get down to the section where it's like how to perform the attack, apparently it looks like they're doing some sort of brute force attack.
Yeah.
So they're still protected by a PIN.
That means somebody has to compromise the host to pull the database off, then decrypt the stuff, right? So this is not just like somebody can set up a website and then steal your wallet, right? They have to get access to your browser's cache.
I mean, I will say after talking to Moodit, like this is really like security 101 fail because a lot of the other good wallets, if it's going to store it on a browser and an insecure device like a mobile device, they'll cut the key up and distribute it to multiple devices so that you have to it's not just a single point of failure.
Yep.
But yeah, I mean, I guess it is. It's the wallet.dat attack, right? It's not exactly something crazy. The math and cool node stuff that they did is genuinely cool, but
yeah, I wonder why they
key
did
derivation and all that
in Node. Yeah, it's weird.
Well,
even though it says the worst possible case would take 175 minutes, so
yeah, it was on like a computer from 1902 here.
Well, it's a 6-digit. It's a 6-digit pin. So
Yeah.
yeah.
This is not difficult. 1080.
Computer from 1902.
Yeah. Go back, look it up. It was an early model.
It was actually the Apple One, not the Apple II.
0.5.
But I mean, basically, this is classic. If you're going to use a wallet, see where it stores the keys. How does it protect your data?
Yep. Don't save your passwords in your browser. Blah blah blah.
What?
Next one, OpenSea Discord hacked. Another Discord hack.
Discord, man. That's
So,
where you get NFTs for free.
Yeah, well, they were trying to promote an NFT scam, stole
course
less
they were.
than 10 ETH.
Sounds as bad
Still-
as when they hacked a bunch of rich people's Twitters and just said, "Give me Bitcoin" or whatever.
And that was 13-year-olds too.
So how
Yeah.
do they get access to Discord? Stealing a
Webhook.
webhook, right? And actually,
Well,
they're
we
doing
don't
that.
know. Is that what
I'm
they
sure
said?
it was,
Some
dude.
assessments.
Or somebody like posted the webhook key in chat. Whoops, and then tried to delete it.
Mm-hmm.
Yep. Or the app itself.
I like to
stores
store
the
my
webhook, right?
Webhooks on GitHub.
Yeah.
It was posted in the announcements channel, so it could be a webhook.
Could be.
Yeah.
That's pretty much all that story, though. Like, there's not a whole lot there, really.
Yeah,
other than
10
that.
ETH. Get good, I guess. Do
10
better.
ETH.
Get
Yep.
better. Do better.
Seriously. That's
And
it.
if you're,
Harder.
yeah, and if you're gonna
Weak
scam,
sauce scammers.
weak. That being said, we will
Lastly,
take
and most
donations of up to 10 ETH.
importantly
Oh,
for the
this
day
this
is
big
the
news.
nice hash bypasses.
I knew-
NVIDIA LHR.
I knew this would be Steve's favorite story of the day.
Oh.
Hell yeah. So LHR limits the hash rate on GPUs for mining things like Ethereum, right? It detects, hey, you're doing some mining, and it limits the percentage of the card that's available to actually do that. So it can reduce it by up to 50% on a 30 series card. You can buy 30 series cards that do not have LHR, or you could have
It's
bought
harder.
them.
It's increasingly hard as time has gone on.
So.
I think it's funny.
And that
Is
was
that
the point of the card, right? Was to reduce
Yes.
the demand
Yes,
for
it would-
cards
yes.
from miners, and it would put them back in the hands of the gamers.
Is that a
Right.
physical control, or is it
No.
software based?
So
BIOS.
software-based control, which has now been bypassed by NiceHash, so they figured out the way. And there have been a few other mining softwares out there that have reduced the impact of LHR on the cards while they're mining, but NVIDIA is the first one to fully unlock it, or NiceHash is actually.
Which I think is funny because actually NVIDIA got in trouble with the, I think it was the FCC or whoever with, because they didn't disclose how much money they were making from people buying mining rigs, right? And they, when they come out, so in essence, they were lying to investors about who their market customer is. They were saying our customer is primarily gamers, when in fact, last year, their primary customer was crypto mining.
I mean, the whole LHR thing was really stupid from the beginning and really confusing as a consumer. It's like, what is that? What am I buying? LHR? I don't know what that means.
Yeah. They tried. GPUs are back though now. You can get them.
Well, you know why? Because the ETH price is down, and so
Yeah,
it's
I was
not
going to
that
say
profitable.
you didn't need LHR. All they had to do was just destroy the price of ETH, and we'd have been back.
They should have done a flash loan.
A
Nvidia's
flash loan,
the
on
biggest,
ETH, the
Nvidia's
biggest
largest
flash loan ever. GPUs are in plentiful supply.
So yeah, I guess
This is good news. Good news for everybody who wants to mine again. I mean,
Here's an attack angle for you. So, what if you flash loan, spin up a GPU on AWS for like 10 seconds, all in the same block, spin it down, pay back the loan?
Unfortunately, they don't provision that fast, but you can try.
You could take over the Bitcoin Cash network doing that.
Yeah.
Yeah, but, possibly. Well, it's been fun, guys. Good stuff this week.
Real fun.
Yep.
Make sure you
safe.
follow us. Yep, stay safe out there. Follow us on YouTube and or subscribe on YouTube. Follow us on Twitter. Join our Discord. Hop in there and chat. And let us know if there's anything specific you want us to talk about. Send us any articles. All that good stuff.
You do a custom outro. Flash loans, Tornado Cash, flash loan. No, I'm just kidding.
Code is law.
All right, guys. Well, it's been a pleasure. Catch you guys next week. Thanks for listening.
Bye, guys.
Bye.